Hello, this is Jordan, and this video is being recorded on Wednesday, April 20th, 2022. Thank you so much for joining me today. And in this video, I'm going to discuss the fact that gold mining stocks are overbought, but why that's a good thing. That's basically the theme of this brief video. Thank you so much for joining me. And a housekeeping message: in the next week, I am going to start updating my book. And by updating, I mean I am going to put the chapters on YouTube. There's a lot of images in the book because I'm a chart guy, and therefore it makes sense to do an audio recording with the charts on a video. So look for that on this channel. I might be able to get the first one done, the first chapter or video done tomorrow or the next day. I'm thinking we're probably going to have about 15 to 20 videos in the entire series. But I'm looking forward to doing that. And if you're not a subscriber to this channel, you're looking for analysis, education, all that on precious metals, definitely subscribe. There's a lot coming. So thank you for that. Thank you for bearing with me. Now let's get to this video, which shouldn't be too long. This is a great chart. This is from QF Research on Twitter. Fantastic follow. One of the best follows just in general. And, editorial comment on Twitter, the best follows are people without a huge following. They're not really self-promotional. And look for those types of people because, I find that a lot of those people put out fantastic work like QF Research. And I wrote an article about what I'm talking about today last week. And this chart here basically just sums up what I'm talking about. And that is the fact that when you're early in a bull market or early in a bull move, strength and overbought conditions, that's a good thing because it portends to more of that in the immediate future. And nothing better lays that out than this chart right here. And so you have the Huey there at the top. At the bottom, you have the 10-day moving average of the percentage of Huey stocks above their 200-day moving average. And that's something that I look at quite a bit. I have my own breadth indicators where I look at the percentage of GDXJ and Huey stocks above the 20, 50, 200-day moving average. And, when you look at that data and then you can smooth it with a moving average, that gives you more data. And this data here, just using a 10-day moving average of that, you can see based on when this data was taken, I think a couple of days ago, it's at about 92%. And so it's showing with the vertical lines the other times that the bottom indicator there hit 92%. And you can see that it is, the other times are within these uptrends. And after those periods, there was more strength that came. So that's my message from this video. I mean, I do have one more chart, but that is my message, is you can't be afraid of something that's overbought early in a move. Once the move gets extended, I mean, there's other indicators you can use to tell you that, too much overbought is now a bad thing. And here's one of those indicators, and this is one of my favorites. And we're looking at new 52-week highs. So we have GDX there. We have below that, we have the new 52-week highs in GDX and 52-week lows. And then at the bottom half, that's GDXJ. And at the very bottom, that's my own custom indicator looking at the percentage of, or not the percentage, the new 52-week highs in GDXJ. And I smooth that data with a 20-day moving average. And so the three significant peaks over the last 7 years or so, I'm showing there with the blue arrows. You can see that for GDX and the 20-day moving average of the new highs, it reached, I want to say 27 to 30%, somewhere in that range. And GDXJ at the bottom, same thing. The peaks came close to 30%. I remember in the summer of 2020, in July, following this, I mean, in my updates, I was pointing out, we're going to come up on an interim peak here in the sector, based on this data. And so this is, these types of breadth indicators, this is what, if you're a little more advanced in technical analysis, you look at this stuff versus, RSI and MACD, that's kind of more entry level stuff. But I mean, this stuff, looking at new highs here, and then also moving average of a breadth indicator, these types of indicators can be really, really useful, as you can see. Now, one indicator is never everything. You can't base it all on one indicator. I mean, who knows the next, if we're in a rip-roaring bull market in the next 24 months, maybe the interim peaks maybe they come at 35% instead of 30% in this chart, and then maybe those, maybe those peaks aren't, major peaks like the 3 peaks we see here. So, you got to assess everything with some context. But that being said, the interim peaks, I do have a line there for the interim peaks in this indicator. And I want to say they're around, 12, 13%, maybe 11%, 14%. So in that range, that's when you get an interim peak. And the interim peaks in 2016 and 2020 they really were not that. I mean, the trend was so strong. The interim peaks were really nothing. I mean, they came and went pretty quickly. And so if you look at where we are now, GDX, I mean, the 20-day moving average of the new highs in GDX, that is below 6%. And for GDXJ, this data is a couple days old. I haven't updated yet, but a couple days ago, that was below 3%. Maybe it's at 4 or 5% right now. But that just goes to show you, yes, we have the strength, but you don't need to be worried about the strength. Look at this chart. Look at this chart again. You can just pause the video right here. And so after that pause, you can see here how effective these indicators are, and that with respect to the overbought conditions we have now in the gold and silver stocks as well, it's nothing to be worried about. It's to get really overbought early in a bull market. That's normal. It's all good. And so that's the message of this video. Let me know what you think. Leave a comment below. If you haven't, make sure you subscribe to the channel. Really appreciate your comments. And thank you so much. Follow all my work at TheDailyGold.com, and you can subscribe to my premium service there. And, last note on that, I think that this correction that we're having in gold, whether it lasts another 2 months or 6 months, 4 months, 5 months, whatever, when gold takes out 2,000 and then 2,100, I mean, everything is going to be moving up for the most part. I've seen this before. And so we're in a special period right now where this is going to be the last chance to get quality cheap in the next couple months. So with that, I'll end it here. Thank you so much, and I'll see you guys again in the next video.